This is the final video in our Startup Financials Bootcamp, and probably one of the most important. If you're in the startup stage of a business, knowing your break-even point is really important. So I'm going to show you a really simple formula that you can use to calculate what your break-even is. But let's go through first defining what break-even sales is. Your break-even sales is the amount you need to generate every month to survive in business. That's quite an important thing. Actually, it'll help you determine if this idea is worth pursuing. To calculate your break-even, you need to know a few things. You need to know what your business operating expenses are, so how much does it cost you to run this business every month, and you need to know what your profit margin is. And as I mentioned earlier on, this will help you determine if this is a viable business and worth pursuing. If you calculate your break-even and you find it too high, then you can make adjustments and ensure that you build a successful business. Obviously, there are never guarantees. If anybody ever says to you, I guarantee you can build a successful business, that is not true. But these numbers really help you make the decision about whether your idea is a viable one. So we're going to start off by discussing a service business. Now, I'm going to put in numbers into this template, which you have access to, but you would put your own numbers in. So let's say, for example, this is my business. I'm starting a consulting company, and these are my expected monthly operating expenses. Okay, so this is what I expect I'm going to incur on a monthly basis in my business. Let's say I don't have any employees yet. The insurance is $150. I'm renting a table for $500. And again, I'm just putting in numbers to help you understand the concept. Remember that you would put in your own numbers. Let's say I don't have any equipment, or let's put in a figure for depreciation. Let's say I've got computer equipment and desks and tables. I speak to my accountant, and she says to me, annually I can depreciate these assets for $1,200, so let's put in $100 a month. Now, something else that I should mention is that often you will see examples of break-evens with annual operating expenses, and that is okay. You can do that too, especially if you've got a seasonal business. This will really help you. But I have found this to be useful in the startup phase, trying to find out what do I need to do. So let's use this example. So in my business, in this example, my total operating expenses every month are $4,305. So let's say you've gone out there, you've done your research, you've seen what your competitors are charging, and you've decided that the industry average is $65 an hour. You're going to be charging, let's say, $60 an hour for your service. So this really simple template tells you exactly how many hours you need to sell every month to cover your fixed expenses, which is a really useful number to know, because as a business owner, you want to know what you've got to do. And I have found that many business owners don't know what their break-even is. And I think this is a dangerous thing, to go into a business without knowing what you need to do. You'll realize also, if you adjust these numbers, the number changes. So keep this in mind. If your expenses go up, your break-even, or the number of hours you need to sell every month, are going to go up too. So if you're in a service business, this is a nice, simple little template that you can use to calculate your break-even, and I encourage you to calculate it. Sit down with your accountant. If you're not the numbers type of person, sit down with your accountant, and they will be able to help you. There's a whole lot of really complicated formulas you can use. I prefer to stick to the simple one. As a business owner, I start off my month knowing this month I've got to sell 88 hours. It's going to be tough, but at least I know what I've got to do. So that's for a service business. Let's go to a retail business. Again, I'll go through the same exercise. Let's say, for example, I'm going to open a pizza store. Let's use that as an example. My accounting fees are going to be $250 a month. My advertising, $500. Bank charges $4,500. And again, I'm just putting in my numbers in here. You would put in your own numbers. Let's say I'm going to take a salary of $3,000 in the beginning. My hydro, I expect to be $250 a month. Internet, $100. Let's say I'm going to employ 2 employees. That's going to be, say, $3,000 a month. And remember, I'm just putting in numbers here. Employee benefits I've found to be about 10%. Okay? So that's why I put that number in. Let's say insurance is $150. Let's say my rent is $2,000. Stationery, $20. I don't need too much of that. Let's say telephone and cell phone, $150 a month. Let's say salaries of employees, $3,000 a month. Because it's quite a capital-intensive business, I have to buy quite a lot of equipment. Let's say my depreciation is $1,000 a month. Let's say I'm paying on a loan $4,000 a year on interest. And let's say I've got other expenses of $1,200. And then remember again, I am just putting in numbers that are coming to my head, and I'm putting this into the table. Because my objective here is to calculate what sales I need to generate every month to survive in this business. So your numbers would be different to mine. Okay, so keep that in mind. Your numbers will be different to mine. You've got to know what the numbers are, put them into this table, and it'll help you with that. So if we're discussing the pizza business, the profit margins are quite high. So let's say I'm done my research, and I know based on my producing a pizza, I've worked out that my profit margin is 60%. And remember, it depends on the industry what your profit margin is going to be. You sometimes get industry averages, but I would recommend if you're going to be opening a pizza store, speak to somebody that is in the pizza business and let them give you an idea of what the gross margins are. And also your accountant will be able to help you with this number. They'll be able to help you based on their experience. So let's look at this table. Based on fixed expenses of $16,165 a month, a gross margin of 60%, to break even every month, I have to generate $26,941.67. You might say, well, you know what, I'd like to work out how many pizzas I need to sell to get this number. Okay, remember, you don't only sell pizzas, but let's assume, to make it simple, that you sell pizzas at $15 each. So let's use that example. So this will tell you that you need to sell, let's just use a calculation here, F11 divided by F13. You'll notice these are very, very simple templates, nothing fancier, that you need to sell 1,800. Let me just get rid of this number sign here. So 1,800 pizzas every month to survive. So this will tell you exactly what you need to do. You need to sell, just get a little rid of some of those decibels. There you go. Nearly 1,800 pizzas at $15 each you need to sell every month to survive. So this would influence your decision. By speaking to other business owners, you might go to them and say, you know what, I've calculated my break even, and I have to sell 1,800 pizzas a month to survive. Do you think this is a viable opportunity? They'd say yes or no, and this is how you'd base your decision. And that's exactly what I want you to do, is I want you to base your decision on numbers. And you can use this table for any business that you know what the gross margin is, okay? So let's say we were going into a more competitive industry. You'd put in whatever the profit margin is, and it'll tell you what sales you need to generate. So let's say a more profitable business. Let's say, actually, you've worked out that your pizzas you can make 80% profit on. Then you put that number in. So this is a really useful template. So I would encourage you to sit down with your accountant, calculate your monthly operating expenses, calculate your gross margin based on your recipes or whatever you're producing, and that'll give you what you need to sell every month. And as a business owner, you want to aim for that number at least every month, because if you're not generating $20,000, you know what, you're going to struggle. But the thing you need to understand that sometimes this takes us a bit of time. to establish or to get to break even. That's okay. You might say, for example, I don't expect to break even the first month, second month, third month, but by month 8, we should be breaking even, or by month 12, or whatever it is. So this really helps you. I encourage you to calculate this number, know this number, because it's going to help you check the viability of your business. And really, that's what this is about, is checking the viability of your business opportunity. So let's discuss some final tips when it comes to break even. Calculate your break even point for every month and calculate for a year. Why not? If you've got a very seasonal business, maybe calculate it for a year. That'll be a more accurate reflection of what sales you need to generate to survive. Manage your expenses. Think of this. If your expenses or your operating expenses in your business go up, so does the amount of sales you need to generate to survive, or as we call it, the break even. If your expenses go up, your break even goes up. If your gross profit margin goes up, your break even comes down. So this is how you can justify charging fair prices for your products, is if you increase the profit margin, you need to sell less. But again, it depends on the industry you are in. If you lower your profit margin, and this is something that business owners often do, think, you know what, I'm going to lower my profit margin and I'm going to generate more sales. Understand that you need to generate quite a lot more sales if you reduce your profit margin. And you could use that little table that I showed you to calculate how much more sales you need to generate to justify reduction in prices. So think about this. Does it make sense? So I'm going to give you some homework for your business in the startup phase, and I think this is really going to help you become a better business owner. Number one is use the templates we supplied you to develop a cash flow forecast for your business. I encourage you to do this. And then as you get your business up and running, update your cash flow forecast. Because the more information you have, the more accurate your cash flow forecast is going to be. I think it's one of your best management tools. Because remember, you never want to run out of money. So develop a cash flow forecast. Calculate your break even. Work out how many pizzas, how many widgets, how many hours, whatever it is, you need to sell every month. It's quite comforting when you know. It may even be quite scary. You may decide, based on the numbers that your break-even's given you, that you're not going to pursue this business. I'd rather you do this than go into a business and not succeed. So it's important that you sit down with your accountant and discuss your break-even. Do research on industry averages. Speak to your accountant and let them give you an idea of what the industry averages are. Even better, go and speak to business owners and say to them, what is your profit margin? Try and find people in a similar industry to you. This will really help. Tell them what your operating expenses are every month, and based on that, they'll be able to give you some guidance and direction. You'll be amazed at how much people will help you if you ask for help. Meet with your accountant to discuss your balance sheet and income statement every year, and I encourage you to do this. You can even get your accountant to help you with your cash flow forecast and your break-even, but I encourage you to at least understand the cash flow forecast and develop it annually on your own and keep it updated, because it's a very, very important management tool. Ensure that you have good systems in place to manage your books. Once you give your accountant good financial information, your invoices, your receipts, your bank statements, they can produce accurate financial statements for you. But it really depends on you having good systems to collect the information your accountant needs. Final tips, and very important ones. Find a good accountant. Go out there, speak to other small business owners, and find somebody that can educate you and help you grow your business. Get organized by implementing good bookkeeping systems. If you want to use software and accounting software, that's okay, as long as you understand it and you understand how to input the information into that. And if you're not good with administration, I encourage you to employ a bookkeeper to input this information for you. Learn how to read financial statements. They're basically just 3 financial statements. You've got the cash flow forecast, you've got the income statement, and the balance sheet. Try and understand. It may take you a bit of time, especially if you're a numbers person. But the more you understand, the better business owner you're going to become. Monitor your most important ratios, your profit margins, those balance sheet ratios I was speaking about. But sit down with your accountant every year and at least monitor the income statement ratios. What's our gross profit percentage? And a couple of other really important ratios like your advertising, your employees. Those ratios give you a lot of really useful information. Also, compare yourself this year to last year and to other people in the industry. So this will make you a better business owner. I encourage you to use this information. Make decisions about your business based on numbers in your financials. So gut feel is important, but gut feel with numbers is even more accurate. So I encourage you to not ignore your financial statements, rather participate and understand them. You want to develop a profitable business that has a positive cash flow and increases your wealth over time. That is your goal, and the majority of us as business owners, that is our goal. Use this information and don't give up. I think building a successful business is one of the greatest things you can do in your life, but you've got to build a profitable business. Remember, if you need some advice and guidance, contact your small business consultant at Enterprise Toronto, and they can help guide you and give you a bit of direction. You can build a successful business. Get out there, do whatever it takes to build a business, and enjoy going to work every single day. Good luck.